Roller coasters can be a lot of fun at a theme park. But roller coasters aren't so much fun when you're investing in cryptocurrencies unless you
buying the dip, here we go, come on, push it, buying the dip.
Take for example this week's massive drop with Bitcoin falling below $30,000, Ethereum dropping below $1,900, and Dogecoin falling down to 24 cents. As I'm making this video, just a few days later, the price of all three seemed to be creeping back up, but overnight they dropped 40% from their peak in early April. So depending on when you jumped in and invested, you could have bought at a super high point, or you could have bought at the dip when it was at its lowest on Wednesday afternoon, and now you're riding it on the way up. But don't panic just yet. If you actually look at the 1 year historical of cryptocurrencies, you'll see that overall it's still up 30%, and year to year it's up close to 300%. Towards the end of 2020, I started to get into cryptocurrency, but it wasn't really till the spring of 2021 till I got bit by the crypto bug. And I got to admit, I cannot stop reading and learning about blockchain technology and different types of coins. I've been steadily buying cryptocurrencies through the dips, surges, and the crazy news. What's up guys, it's Mike here, and today's video is all about cryptocurrency news and events. What's going on with it? What are the things that are affecting the major drop that we saw this week? And more importantly, how you can invest in cryptocurrency moving forward amidst all the market fluctuations. But before we do that, I want to give a shout out to Webull. If you guys want to invest in stocks and cryptocurrencies, I suggest jumping onto Webull. The app is user friendly and it's got a lot of great information for doing research on different stocks and cryptocurrencies. The link is in my description down below. You can click and get 2 free stocks with a deposit of $100. So if you don't mind, click that link, sign up today, and you'll get your 2 free stocks. With that said, let's jump into it. As you may have heard, Bitcoin and other cryptocurrencies made some major headlines this week amidst negative news coming out of various sources. By that I mean China and also Elon Musk tweeting again. So let's get into that. First up, you had Tesla CEO Elon Musk, who likes to go off on Twitter and make comments about various things, ranging from space exploration to going to the moon to colonizing Mars to this week not using Bitcoin anymore until they adopt green technology, or green energy. So amidst that, there was a panic sell and the cryptocurrency, especially Bitcoin, dropped significantly. Also this week, the Chinese government released a new round of regulations aimed at regulating cryptocurrency brokerages and banks that will affect the US greatly. This news just adds more volatility to the already volatile asset class since its creation. Bitcoin, as you know, is the flagship currency that really started it all. And Bitcoin dropped to a 3-month low, down to around $30,000. At one point for a pullback of 30%, and continued a week of panic sell-offs in the crypto space. Ether, which is the main coin for the Ethereum blockchain technology, also took a sharp hit this week. It at one point dropped down to $1,900, which is a 40% decrease from its early April high. Also, another coin that was severely affected was the ever-popular Dogecoin, which dropped below 24 cents, but it is bouncing back this week. So what is China doing that's going to affect the US markets here for cryptocurrency? They announced that they're banning financial institutions and payment companies from providing service related to cryptocurrency to investors. They also warned investors against speculative cryptocurrency trading, citing that it's gambling. So there you go. Nothing like a statement like that to create massive fear in investors. This is just China's latest attempt to clamp down on a booming digital currency market. Under this ban, such institutions such as banks and online payment sites are not permitted to offer clients any service involving cryptocurrency, such as registration, trading, clearing, and settlement. Their reason for these changes is, I quote, "Recently, cryptocurrency prices have skyrocketed and plummeted, and speculative trading of cryptocurrency has rebounded, seriously infringing on the safety of people's property and disrupting the normal economic and financial order. The institutions must not provide saving, trust, or pledging of cryptocurrency, nor issue any products related to cryptocurrencies." This is just the latest move from Beijing against cryptocurrencies. In 2017, China shut down its local cryptocurrency exchanges smothering a speculative market that had accounted for 90% of global Bitcoin trading at the time. In June of 2019, the People's Bank of China issued a statement saying it would block access to all foreign and domestic cryptocurrency exchanges and initial coin offering websites, aiming to clamp down on all cryptocurrencies, trading with a ban on foreign exchanges. Furthermore, the Chinese government went on to say there are risks in cryptocurrency trading, saying virtual currencies are not supported by real value. Their prices are easily manipulated, and trading contracts are not protected by Chinese law. This so far has proven to be true. I mean, for example, with just a simple tweet from Tesla CEO Elon Musk that can cause mass panic selling or buying of a particular cryptocurrency and an adoption of a new one overnight is massively disruptive to a digital currency. So how can you invest going forward? Look, regardless of all the hype, the positive, the negative news, and the tweets out there, I still think cryptocurrency is here to stay. There's a lot of research out there to show that many businesses in the future will adopt cryptocurrency. And for one, I will continue to buy it. Now, this is just my opinion, so please do your own research and make your own decisions. Buy what you can afford and buy what you're comfortable with, but don't over leverage yourself in any one cryptocurrency or any asset class of cryptocurrencies for that matter. Don't overinvest, and by all means, make sure that you're comfortable with the position that you hold right now. If you feel you're overexposed, then do what you need to do and maybe dump some and let it go. And I would not invest more than whatever percentage of your portfolio that you can afford to lose. For example, for me, around 5% of my portfolio, I would risk in cryptocurrencies. So that way, in the event that the worst case scenario happens and it does tank and I lose 5% of that, I still have other things that will keep me afloat and it won't affect my quality of life. Always seek a licensed professional when investing. Please know that there is risk involved in any type of investing, especially cryptocurrency. And that you have to consider the upside versus the downside. I feel like a lot of people, and even myself included at the beginning, were looking at cryptocurrency and investing in a certain coin that was supposedly going to take off as a get-rich-quick scheme and a way, basically their golden ticket to retiring and becoming wealthy. I would call that more of speculative gambling, and I don't think that's a very sustainable long-term strategy, even if you have a lot of money to waste. In my opinion, investing in Ether, Dogecoin, or Bitcoin should be around 5% or less of your total portfolio, as I mentioned earlier. And again, assess the risk and make the right decision for you based on your financial situation and what you're able to risk and what you're okay with losing in the event that things go bad. To be a good investor, you have to analyze risk, you gotta know your market volatility, and diversify properly and protect yourself from exposing any part of your portfolio to more than 20% in a loss at any one time. So long story short, yes, I think cryptocurrencies are a great investment. Yes, I think they're here to stay. And yes, I think we all should invest in them. However, I wouldn't make it too big of a percentage of your portfolio. I would tread lightly, assess the risk, and make the best decisions for your financial situation. I expect to see a lot more volatility in the coming months and years to come, as it still is relatively new in the grand scheme of investment. Don't over leverage yourself, stay comfortable, know your position and know your risk in that position. Be diversified, educate yourself, watch the market, and stay consistent. And you should be just fine. So guys, don't forget to like, comment, subscribe, and click that notification bell as I post on this channel weekly. If you got any questions or comments, drop them down below. I respond to each and every one, so I will see you on the next one.